So I wanted to take a look at whether or not the bad companies in an industry will actually give you better value than some of the more, the more well-regarded companies. And I have a few companies pulled up here that I'm going to be referencing to, but mostly going to be doing this in Paint because I feel that it's easier to represent the companies and kind of show you my ideas. But most companies, well, all companies actually can be put into a T-chart. You can take a company, you can rip it apart, and you can essentially list all the good characteristics about a company and all the bad characteristics about a company. Now we're going to have some X's, and these X's are going to represent the good and the bad things about a company. So good things are such as the potential future market share of a company, the unique products that it might offer, and all of that stuff. So yeah. So a lot of the time, whenever you have a new industry, whenever you have a new developing industry, such as the marijuana industry, what's going to happen is you're going to be having a lot of new companies that are going to be coming out. And a lot of those companies, in order to get investors, they're constantly going to be pumping up these characteristics. So they're only going to be talking about their good characteristics. And the internet being the internet, it's going to act like an echo chamber, and a lot of people are only going to be getting these for quite a while. They're not really going to be looking at anything else but these good characteristics. And a lot of the time with new companies, you're not really going to be able to get a really good idea of the downsides of the companies, because these companies, they haven't been around for a very long time, and because of that, these companies haven't had a lot of time to screw up. Like if you have a company such as Nutritional High that's going up, the company doesn't have a lot of downside currently because it actually hasn't done anything. Like whenever a company hasn't done anything and it has no history, you don't really have a lot to go off of in terms of what are the possible bad things about a company. But as some of these smaller companies start to get going and they start to actually do things, you start getting some of these bad things coming out. And in Organigram's case, for example, they screwed up with pesticides and they had a really big recall. So the recall caused them to lose about 30% of their value, while other companies, well, other companies also lost value during this time, but they did not lose nearly as much. So yeah, but as time goes on, a lot of the time you're going to be having companies run into troubles. They're going to actually start doing stuff, and they're going to be screwing things up, and a lot of the times the bad characteristics are going to show themselves, and because of that, companies or even the whole sector is actually going to start dropping because people have been so used to only looking at the good things that whenever the bad things come out, uh, the whole sector drops because people weren't expecting whatever to happen. So let's say that Organigram has a massive recall, which it did, and the stock drops. If you're an investor in this company, you have two options. One of your options is to stick with the company and hope that it does better in the future. And your other option is, let's say this blue X represents the recall. So Organigram in its history now has this blue X. So your option as an investor, what you could do is you could sell off the stock, you could take your loss, you could take your money, and then you could go put it into another company that is pretty much going to be exactly the same as Organigram. The only difference is going to be that it's going to be having all of these good characteristics, but not going to have this X. So it's not going to have a recall under this name. And a lot of people are doing this. But the question is, whenever you have a giant recall such as Organigram, the question becomes whether or not too many people are taking their money and leaving, and the stock is dropping too much for its value. So this is pretty difficult to determine. And in order to determine this, you would have to take a look at similar industries, and you would have to take a look at similar events, and then you would kind of get an idea of how an event like this would affect the company in the short term and in the long term, and whether or not people are overreacting with Organigrams, because chances are that in the future you're going to have other companies be screwing up as well, and Organigram is not going to be looking like such a terrible company, because the first company to screw up in an industry, it looks really badly compared to everybody else because everybody else hasn't screwed up yet. But as time goes on, as people do stuff, they're going to start screwing up. Some companies are not going to be getting their license as fast as they might want to. Some companies are going to be running into financing trouble. There's going to be a lot of different things that are going to be happening. But the point is, that some of these companies that look bad right now, they might not look so bad in the future. So your question as an investor is, do you want to invest in a company that you already know the bad news about, or do you want to take your chances with a company that you don't know the bad news about, and that might in the future, something bad might happen to that company, and if something that is unforeseen happens to a company in the future, you're going to have your stock drop. So that's the question for the investors. I mean, these are pretty hard to predict generally, so yeah. I am invested into Medical Marijuana Inc. and I'm using this chart because I'm familiar with it, but this company had a lot of pumps and dumps at around the 2013-2014 level, and the company also has a lot of toxic debt and it has a lot of dilution. But the simple fact, why did I click that? But the simple fact that you know that, I think, is a good thing. So whenever you know the bad sides of a company and whenever that is priced into a company, I personally think that that is better than not knowing some of the potential hurdles that a company might have. It doesn't mean that you can't make profit, and of course there are exceptions, but just consider that whenever you are investing in a new industry, that you might be looking at these a little bit too much and not considering these enough. So these are pretty important. You want to fully understand them, and you want to make sure that the market fully understands them, because if the market does not understand these things, then you might get a scenario like this whenever you get, this happening. And this stock is going to drop even more on Monday whenever the market's open because some more bad news came out about it. So you don't want to be stuck in this scenario. You don't want to buy a stock around here when this is going to happen. So you have to really take into consideration and think about these things in order to not get screwed over. But hopefully that makes sense. And that answers some questions. Hopefully you learned something. Let me know if I missed anything. Let me know if I did something good or bad so I can fix it in the future and actually become a better commentator and better explain my ideas. But that's it.